That's right, folks. You saw the title, a SoFi stock about to squeeze. Well, we're going to break that down in this video. We're going to go over their short interest. What is short interest? What's a short squeeze? We're going to break down the charts, my thoughts, all that good stuff, what I'm looking to do. But before we do that, guys, do not forget to get up to 16 stocks for Moomoo, each up to $2,000. Use that link down below. Open up your account and fund it with at least $100. You get 5 stocks, each up to $2,000. And fund your account at least $1,000, you get 10 more stocks, totaling 15 stocks. And guys, listen to this, the best part of the promo: fund your account at least $5,000 on top of those 15 stocks you already got. You also get a free share of either Tesla or Google, guaranteed, which, guys, this is the best promo right now by far. So if you want some free money, who doesn't like free money, and you want to help out the channel, use that Moomoo link down below. And of course, that is an affiliate link. I appreciate you guys as always. And with that being said, cheers, let's dive right into the video. So of course, we've talked about SoFi stock a lot here on the channel, and you guys know Thursday and Friday were not the best days for SoFi stock. Even though we actually took the highs out on Friday from Thursday, we did not do that well. The stock actually went down over 4% on Friday, and you guys can see that was a drop of around, the drop from the highs to the low of the day was around 11-12%. So pretty big drop there for SoFi. And with that drop, again, we went down 4.2%, and we also took out the lows from Thursday. Thursday's lows being around, where were they? 860. On Friday, we hit around 833. So not the best day on Friday and on Thursday for SoFi. Now we're actually under the moving averages on the 5-day, 5-minute, and we have a death cross. And before we actually talk about the charts, break them down a little bit more, guys, let's take a look at the short interest percentage here for SoFi and talk about that a little bit. So let me pull it up here on the Safari tab. Bear with me, guys. I'll make my face a little bit smaller, my big old head. There we go, guys. So right here, we can see, if I zoom in, I have to zoom in a lot. There we go. You can see short interest percentage of the float right now, which essentially are the shares out there, available to be traded, is 16.6% right now. That again is the short interest of SoFi stock, which is what we're talking about in this video. And if we go over here, the off exchange short volume ratio, 60%. Off exchange short volume, 31.3 million shares. We're not going to get into that too much in this video, but I want to focus on short interest, what a short squeeze is, very quickly, and we'll compare this to other stocks that have very high short interest. So again, 16% short interest percent of the float is what SoFi is rocking with right now. And what is a good short interest, you may ask? Well, short interest as a percentage of float below 10% indicates strong positive sentiment, and short interest as a percentage of float above 10% is fairly high, which a lot of stocks are, 30, 40, 50, maybe not a lot of stocks, but, we'll talk about some here that are that high. But SoFi, again, is at 16. Not crazy high, but also not under 10%, which is what, what's considered as a short interest as a percentage of float that indicates strong positive sentiment. In this case, it's 16%. That's over 10%, which indicates significant pessimistic sentiment. Or it could also mean that, a lot of people are betting against SoFi, and a lot of traders are in this thing, shorting it in the short term. Maybe they think, the stock just ran up too much in the short term, which it did. I mean, it ran up a lot from $4.50 to over $10. Maybe they think it's going to go down, $6 again, maybe $5 again, right? That could be a reason why shorts are piling on right now, and maybe they're betting on the very short-term downside of SoFi, not necessarily the long-term demise of SoFi. A lot of shorts, guys, you have to realize this. They target, sure, a lot of shorts target companies that are going to fail in the long term, but a lot of them also target stocks that have just ran up too much in the short term that they think are going to drop. And what happens, guys, when a lot of people, hedge funds, institutions, the big boys, retail, whatever, what happens when they go out and they short a stock that's ran up too much in the short term, arguably, which arguably SoFi is one of those. They pile in, they short it, and the short percentage, the short interest goes up in the short term, right? And we'll see if it continues to go up in the long term. I don't know. But right now, in my opinion, the reason why SoFi has a pretty high short interest is not so much because the company is going to fail or it's going to, crumble in a year or two. I doubt that, to be honest, personally. I think it's because it's just ran up too much in the short term. Traders are coming in. They're speculating on a short-term drop, and a lot of people are shorting it. That's the reality of the matter. And to look a little bit deeper into short interest, guys, look at this. Short interest indicates how many shares of a company are currently sold short and not yet covered, which if you cover, when a short covers a short position, right, what does that mean? They buy back the shares that they borrowed. They're forced to buy wherever the stock's at, essentially, and well, that causes a huge spike in the stock, a lot of momentum, buying pressure, and so forth, right? And short interest is often expressed as a number, yet it is more telling as a percentage, which again, SoFi's is 16%, and an increase in short interest often signals that investors have become more bearish, while a decrease in short interest shows they have become more bullish, which I gave my reasoning on that a minute ago, guys. And short interest can be used as an indicator of market sentiment for a company stock or the market as a whole, and some investors use this as an indication that it might be profitable to short that company's stock, which I think, again, people are piling on because SoFi's just ran up way too much in the short term. That's my opinion. And look at these other stocks here, guys, that have an insane amount of short interest, right? Carvana's at 56%. Imagine that. SoFi 16%. Carvana is 56%. We have Beyond Meat, 42%. Big Lots, 38%. Upstart, 35%. Novavax, 35%. AI, See-Through AI, 35%, right? Fisker, electric vehicle company, 35%, right? Root, we covered that one recently, 31%. That squeezed a lot recently. We have Luminar Technologies, 26%, and the list goes on, guys. So realize these probably are way more risky than SoFi, in my opinion. And there's a lot of speculation going on with a lot of these, and maybe these won't be around. I don't know. The difference between SoFi and a lot of these companies is I think SoFi has very strong fundamentals long term. Maybe something like Carvana or I don't know, Blink chart. Well, maybe not Blink, but maybe Microvision or something. I don't know. I'm just picking on random companies. Maybe they don't have that great of a vision long term, which is why their short interest might be even higher because people are piling into short it. Either way, these are a lot of other company stocks that have high short interest. And coming back over here, guys, to ThinkOrSwim very quickly. Let's say SoFi does start squeezing, which is totally possible. And how would it squeeze? Well, there's many different ways it could squeeze, guys. Maybe we got a huge firm that buys in and that starts to move up the price, which triggers shorts to start covering. That could be something that happens. Maybe they crush EPS or revenue next quarter, or maybe their guidance is phenomenal, through the roof, way above what we expected. Like, remember NVIDIA? This is completely an unrelated company, but NVIDIA reported crazy guidance last quarter. Nobody expected it, and their stock ran up like 20% or 15, 10, whatever it was. Let's say SoFi guidance comes out, hypothetically, crazy guidance, and it runs up 10%. Maybe shorts start to cover, and that triggers the short squeeze where it starts to go like crazy, maybe more. And this is all hypothetical, guys. We're thinking out loud here. Of course, nothing's guaranteed. I'm just giving you different scenarios that could play out. Maybe, they start to become consistently profitable, and, maybe more student loan volume comes in than expected, like we've covered recently. Now that the student loan forgiveness is out the window, maybe student loans start to run through the roof, which I think will happen over the next couple of years. I don't know what's going to cause the short squeeze. Anything could cause the short squeeze. We just have to wait and see if it actually happens, guys, and realize where we are on the charts, which in this case, on the 4-hour time frame, like I've covered before with SoFi, we are now at we're in a wedge. We're making higher lows and lower highs, and we're currently now testing the bottom of this trend. You guys see it here. If I extend or I remove the drawing, make a new one, you guys can see, boom, we're now at the bottom of this wedge. What direction are we going to pick? So what do you guys think? Let me me know your thoughts down below in the comments. Hit that like button, and of course, make sure to subscribe. And guys, before you click off the video, don't forget to get your free money for Moomoo, up to 16 stocks, each up to $2,000. Fund your account at least $100. You get 5 stocks, each up to $2,000. And once you fund your account at least $1,000, you get those 5 stocks we just mentioned, plus 10 more stocks, totaling 15 stocks. And guys, fund your account at least $5,000. Listen to this, guys, crazy. You get another free share of either Tesla or Google guaranteed, which makes this by far the best promo. And it's limited time, guys, so use that link down below or go to stocksurfest.com/Moomoo. And with that being said, cheers, guys. I'll catch you in the next video.